It is Saturday, the 21st of February, 2009. Brian Shannon here from Alpha Trends. Let's take a look at the market here, see where we ended up for the week. The market gained 8 cents on the NASDAQ on Friday. You can see here it was another volatile session. The market did gap lower, ran up to prior levels of support in here, just under that 29 area, and then backed off pretty hard, made a lower low, and here we are back up, basically, again, up 4 cents on the day, but very little change. We're obviously still in a downtrend on the longer term time frames, of course, and this 10-minute time frame, it's looking like the market's trying to stabilize in here a little bit, as it did find support just above that 28.50 area, and now we're back into this level. The bigger level this past week, where this market found resistance on a couple occasions, was at $29.60 level, and that's a level we've been watching for a while as support and resistance in the past, and it did prove to be an important level once again this week. So that'll be important next week, I think, as well. We've still got a downward slope to this 5-day moving average, so still can't trust them in here, and obviously with the daily time frame you can't trust it either. We are down towards the low end of the range, and that's where we seem to have found some support just above that level of the range that's been intact basically since the beginning of the year, and that's about 28.5 up towards about 31.5. So again, we're down towards the bottom range there. We did have heavier volume on Friday, and the market was again lower and pretty volatile, but finished above the daily VWAP here on the 1-minute time frame. You can see that it kind of chopped around. It looked like it was going to fall off that cliff once again right in here, but then I guess Obama said something maybe in here is what I had heard, and the market rallied on some pretty heavy volume, but closed above daily VWAP, but wasn't able to add to those gains rather towards the end of the day. So all in all, we're still in this trading range basically that's been intact for 2 months now, and we're down at the bottom end of it. Some of these other markets like the S&P 500, which finished down 76 cents, looked like they were really going to drop off the cliff, and we're really we're testing the November low right now. Basically, we've come within a couple points of that bottom in here. The low that we'd seen at $74.34 was the low that we had seen back in November. Friday's low was $75.77, so we're $1.30 off of that. And the market right now, basically, again on the weekly time frame, we're in that downtrend. On the 10-minute time frame, this S&P 500 is obviously more damaged than the NASDAQ. The NASDAQ has been the relative strength leader, but for the S&P, the important levels this past week were just below that $81 level, and then we had broken support on Friday, and unable for this market to rally as the NASDAQ did and get back into the prior range. So we've got this level that's going to be important early next week, and that's about $78.30. Market can get above that, then the next level of importance will be right around that 80.5 area. We do have a declining 5-day moving average, but we saw some heavier volume late in the day as the market did begin to rally. So right now the market may be searching for an area to rally from. It's the overnight volatility with these gaps up and down this past week made it very difficult for people who are holding overnight positions, but at the end of the day, of course, we are still in a bear market, and it remains guilty till proven innocent. Let's take a look at the 1-minute time frame here. Same pattern basically as the NASDAQ, in that we were able to see that rally, which emerged right here at about 315 rather, and that it was able to rally and hold above the daily VWAP. But again, the 10-minute time frame, we see that it's a little bit more damaged in here. So 76 is where we've got some short-term, saw some buying emerge, so that's important as far as support. And then, of course, the November lows, and maybe we can get one of those washout moves to take it below there. We'll see. It's guilty till proven innocent. The Russell 2000 continues to be one of the weaker setups in here. They were down 56 cents or 1.3% on Friday. This market had broken, of course, the important support in here earlier in the week at just under $43 a share, and this one's still got some room to travel as far as testing those November lows. It is still very vulnerable to further downside. The 10-minute time frame, we still have a clear pattern of lower highs and lower lows. Maybe getting back above here holds a bigger sell-off for another day if this market can recover. That is, I think that the first level of defense for the sellers is this 4160 level, and the bigger level that we had seen break this week right on that 43.5, and that had been resistance in here, which was prior support. So 43.5 is important on the upside. We do have a declining 5-day moving average, which says guilty till proven innocent. There's a lot of people are starting to want to be buyers in here because I think it's down, so far so fast. But we could still see, I think, a real vicious couple days of selling. You got to be open-minded to anything in here, basically. With the declining 5-day moving average, though, it's tough to trust the long side for more than a couple minutes. You see, though, that when you get these big rallies in here, I talk a lot about the TZA, which is a triple short, and the triple short, it dropped from 75 down to $69 a share in that period of time. The inverse, or not the inverse, that is the inverse, but the triple long Russell 2000 fund at the same time went from $17.60 to $19.20. So there's a tremendous amount of opportunity for short-term traders in this market, and that's where I think you continue to have to be focused on strictly day trading in this environment. Right now, I think if you're holding a short position, they're getting stretched to the downside, and it's clearly far too early to do any buying for something that you want to hold. The semiconductors were up 17 cents. They are right down to the bottom end of that range as well. So this $16 area is going to be important for this market to hold. Breaking below that, then we've got new lows for the year, and then that puts the November lows back into play in this market as well. Gold had a strong day after a little bit of profit taking on Thursday. It's up to $97.80 here on the GLD. So it's closing in that $100 level very quickly, and no reason to, there's nothing here that suggests that the momentum's slowing, but it is getting extended, so it makes new purchase up here a little bit riskier. Oil was up 7 cents. This thing's been trading pretty volatile here the last couple days, as we've seen, of course, the new all-time lows put in this week for the USO, and on a 10-minute time frame, we had seen a big gap up on Thursday that failed, and then the market rallied back up to that 5-day moving average. Friday, the market gapped down, and it's starting to stabilize in here. It is above the 5-day moving average. The 5-day moving average is declining. If this market can get back above this area, about 2460, and it can hold on above that 5-day moving average, then there's a possibility that we're going to go up and test some of these levels up near about 25.5, and this would be an area that you would expect to see some supply released here at 26.30 or so, and a bigger area is at about 27.5. So oil remains in a downtrend. It's been beaten down real hard here recently, so it looks like it might be setting up for a bounce. If you're going to trade against the primary trend, which is lower, then I think that the best opportunities in oil are also in day trades. You got to look at the volatility in here. You got to be real quick because again, if you're holding overnight and then they gap it lower like that, it shakes your confidence. You think, well, maybe it's going back down to the lows. So any contrary trades contrary to the primary trend really have to be shorter term. Let's look last at the IYR, because this market had a pretty big up move on Friday. It was up 6.4% with its $1.62 rally, and this market's been really pretty much hit the hardest. So maybe this is setting up for a little bit of a further bounce. We had real big volume. We had this big green candle as it came down close to these lows from November, just a couple cents away basically. So if we get a further bounce though, maybe only up towards 30, this prior level of support will be important as far as potential resistance now, and it's best left again for day trades. And there's some really nice moves in here, and the SRS is the double short, and the URE is the double long. So in a percentage move you're going to get on a daily basis, the URE is going to give you twice the percentage move as the IYR. So we remain in a bear market. Things are sold off pretty hard in here, maybe starting to stabilize a little bit. So it's going to be another interesting week.